So basically what I did was I saw a little bit of downward momentum and turned my long calls into a diagonal spread. Basically on a diagonal spread, there's a multitude of ways in which you can successfully utilize the strategy, obviously, but a great example is like what I did today. So currently, if you're following along, I'm long September 21st, 360 calls on Tesla. However, I don't see a lot of upward momentum, and we all use different technical indicators. I just saw a MACD crossover. So what I did was I wanted to mitigate any potential loss there and capitalize in between on the time between now and then. So this is kind of where diagonal spreads come into play. So it's August 14th right now, and the premium isn't great on the August 17th contract. So for this reason, I sold August 24th, 370 calls at 505 per contract, giving me about $500 a contract. And it expires on August 24th. So they're called diagonal spreads because contracts in the exchanges used to be listed um, with the strikes going vertically, which is where the word vertical spread comes from, and then the months horizontally. So that's why it's called a diagonal spread. So I, the fact that I have different expiration dates and different strikes is what makes it a diagonal spread. So you might ask yourself, why do you still hold the long calls if you just sold short calls? So I still see upward momentum in Tesla, but when I see it start tapering off or dipping down, I want to be able to capitalize on each and every move that that stock makes. So the strategy is very similar to a calendar spread, but it's more bullish due to the difference in strikes and the fact that I'm long the lower strike here. So this is just one example of how you can get the diagonal spread to work in your favor. I'm going to do a little screenshot here of what exactly I saw happen. So right here was where I saw it start dipping down here, and here I saw that MACD crossover. So I sold, and now I'm making money on the way down when I'm also losing money on the way down on the call, but I've got more time on it. So basically what we can do is just, sell those, get that time deterioration in between now and our, ultimate goal, our strike that's got a further expiration date.